WeWork and its ensuing, I don't know, IPO travails, for lack of a better term. I know you guys talked a little bit about the pricing issues last week, so we'll put that to one side. But the biggest kind of news items are that it is reported, that Softbank may want the IPO to be held, which would be fascinating. It has also been reported by CNBC that Adam Neumann, the co-founder and CEO, wants to push ahead with the IPO. And this has led us to a question about how much money they need to kind of operate the business. And if the IPO doesn't happen, what's next? So Kate, where do you kind of, what's your opinion on this drama?
So not terribly surprising given what we've been hearing the last few weeks, but I just want to take a step back and say, like, the reason why Softbank is encouraging WeWork to potentially shelve its IPO is because at this point, Wall Street's response to the IPO has been so, terrible, that SoftBank's at risk of losing so much money because SoftBank invested late stage in in WeWork billions of dollars. And if WeWork indeed goes out at, say, $18 billion valuation or whatever we're kind of thinking is going to be the case at this point, SoftBank is in a really bad position. And this has already happened with Uber, which had a very disappointing debut just a few months ago, and they were also heavily backed by SoftBank. So SoftBank is in a really, really, really precarious position right now, and I can see why they'd be encouraging WeWork to perhaps wait, although the markets, as everyone's been saying all year long, are frothy. It's a great time to go out. So do you think, Alex, waiting, say 6 months, will benefit WeWork at all?
I wish I had one of those like folksy colloquialisms, like you can't put lipstick on a pig backwards. I don't have one, but my general impression is that the structure of the company will not materially change over a 6 month or kind of a 2-quarter period. So oddly enough, if I was giving advice, which is not my job, but if I was, I would say go for it now. Just eat your lumps, go for it. If you believe in your model this much, raise as much as you can, get all the debt, invest it in the business because you claim it's going to be great. So then let's see how it plays out. I don't know if they can actually raise $3 billion in the IPO, which is the requirement for the $6 billion in debt, which means we don't even know if they can trigger that option from bankers. On the Softbank point, I just want to throw in a little bit of nuance to that. Kate, I'm presuming they have some downside protection on their investments into WeWork. So it isn't quite as simple as people are saying, like if it's 15, they're down by 25% on their investment. There's some nuance in there, but they did put their last billion into the company at a $47 billion valuation, which I'm sure marked up their prior investments. So on paper, they looked like a very good set of deals. If this goes public at 18 or 20, which is roughly the valuation they put their money in before, a lot of that paper accretion of value goes to zero as they're raising the Vision Fund too. And I think that's part of the matrix of problems we're seeing.
Yes, you're right. And I think there are many, many moving parts to this entire situation. But I think one of the key takeaways here for people listening to this podcast is just that valuations can be very meaningless. So the $47 billion valuation that WeWork raised at, it's clear the company's not worth that much money. And I think everyone at the time thought that, but now we're really seeing the impacts of hyper exaggerated valuation. So one of the things I wanted to bring up was, months ago when Pinterest went public, we had a long conversation on equity about what it means to be an undercorn. So just sort of a stupid buzzword that means a company that, I guess, correct me if I'm wrong, but I guess just a company that IPOs at a valuation less than what their most recent private market valuation was.
Yeah, and the idea was that because most companies going public these days are unicorns, it's kind of a stand-in term, but it would apply if you were worth 900 on paper and went out at 700 million as well.
Yeah, and it happens a lot because, like I just said, the valuations are not often correct, and sometimes they are so inflated that a company has really there's no way they can match it. So in Pinterest's case, it did end up, actually, I think it ended up being okay when it did go out, but for weeks, people were suspecting, it was going to be an undercorn, it was going to be worth billions less when it went out, and I think it ended up kind of floating right around where people expected, which kind of anticlimactic, but that's certainly not what we're seeing with WeWork.